Assalamualaikum warahmatullah. Welcome back to our discussion. I would like just to bring up one issue in consumer financial protection. That is the use of murabaha financing in many countries, uh, where the narrative has been that the bank is the selling party that sells the object to the customer on credit basis, where the customer now have a debt obligation to pay over the installment period. So in the murabaha financing that is practiced in many countries that does not use tawarruk, countries like Indonesia, Pakistan, and some of the African countries, they do not use tawarruk, but they use murabaha financing. And as I said earlier, the description of the murabaha financing has been that it is based on a sale, or it is a buy and sell contract, where the bank is acting as the selling party that sells the goods to the customer on credit terms. And therefore, in the contract of murabaha, so when the customer looks at the contract, the agreement, for him or her to make the signaging, there is a mentioning of a sale price or a selling price consisting of the facility amount plus the profit margin. And therefore, once there is a mentioning of a sale price or selling price in the agreement, it means that the bank is selling the object to the customer. And number one, it also means that the bank must be the legal owner of the goods prior to the sale of the goods to the customer. So this means that the bank is actually doing a buy and sell transaction where the bank will have to buy it from the supplier, and therefore getting over the ownership, and because from the sale, in the sale transaction, of course, the title of the asset will move from the supplier to the bank, and then the bank will be putting the asset on their banking book prior to the disposal to the customer under the credit sale agreement. And therefore, we assume that when there is a statement of selling price or sale price, then there is a sale taking place. There is a true sale taking place where the bank is the legal owner or rightful owner during the holding period prior to the disposal of the asset to the customer on credit payment basis. However, if there is no evidence, if we were to investigate and research whether the bank has actually taken ownership of the object before making the credit sale, then there is a violation of the agreement. So meaning that the bank is selling something it does not own. If the object's ownership still prevail in the name of the supplier or in the name of the pre-owner, then technically the bank is selling an asset that does not belong to them. And this, of course, is a breach of Sharia or Islamic law, where one must not sell what one does not own. So we must be very careful when we do murabaha financing, so that what we have professed or what we have claimed to be a sale, it must be a true sale. And in that manner, prior to the resale to the customer on credit, number one, the bank must be the legal owner of the asset, and number two, by virtue of being the legal owner, the bank carries the ownership risk or the price risk, meaning that potential loss from the market movement that may cause the value of the asset to decline, and that will cause the bank some losses because maybe the customer would decline to purchase due to the fact that now the market price has come down, and therefore it will be a loss to the customer to buy based on the price that was earlier stated by the bank. This is when the issue of taking ownership is a big complication to any Islamic banking that wishes to carry out the buy and sell contract as opposed to riba. It is easy to to practice riba because it is just money lending. It does not require any kind of sale or purchase of any object or asset. But when the Islamic bank comes in to use al-bay' as it has been prescribed by the Quran over riba, and therefore to use al-bay' in the true sense can be very difficult for the bank because of the fact that, as we see earlier, that if the bank is to actually purchase the asset, take ownership of the asset, and carry ownership risk of the asset, and therefore the exposure to losses would be much bigger than a loan, and therefore a very high credit risk weighting will be accorded to this position, that Islamic bank would not want to play with. And therefore most Islamic bank, they do not actually buy and take ownership of the asset prior to the resale. So most of the narrative or description, even it is a very serious case if the selling price appear or the sale price appear in the agreement letter, then it is a serious case, because if there is no evidence that a sale occur, a true sale occur, but only a sale on paper, then the bank will be exposed to Sharia non-compliance risk, and maybe even litigation from customer who are not happy, or maybe a defaulting customer will take advantage of this so-called non-compliance issue in using sale in the Islamic banking business. So this is one of the issue in conduct risk that can be taking place when the bank who claim that there is a sale, but no sale has actually taken place because there is no evidence of ownership transfer from the supplier to the bank. So let's ponder on this issue, and inshallah we hope that we can discuss further what needs to be done to remedy the situation. Thank you very much. I'll see you again. Assalamualaikum warahmatullahi wabarakatuh.